In just 3 weeks' time, the markets have a huge close coming up. And so far, things are looking positive. Things are moving to the upside. Of course, there is always the possibility of a collapse. But in today's video, I want to go through the specific data over 120 years of that data and how it has unfolded during this period of the next 3 weeks. Don't go anywhere. Hit that like and subscribe button. We've got a ton of data to get through today as it's the end of the week, another closing week in the financial markets. So we've got the S&P, we've got the NASDAQ to get through, the VIX pushing to new lows, setting up a new bull market based on the data and the history here, the Dow Jones, BTC, of course, and of course the short-term analysis for BTC. So we've got a ton to get through. Don't go anywhere, like, subscribe, and if you want to get involved with our trading workshops, link is in the top of the video description. More on that later. All right, guys, let's start with the monthly look at the S&P 500 before we drop it down to lower term timeframes, our weekly, our daily look at the market. So overnight, we had a very big push to the upside, ending the week at 4,348 points. We're going through the traditional markets before we get to BTC because we need to see the strength in the traditional markets before we would see a push or a big bull market start for BTC. Basically, the retail top start to take over. We know that there's already a low in BTC and it is putting in an accumulation range, a consolidation range, and we're seeing the effects also in the S&P and the NASDAQ. So this has essentially met three of our major flipping criteria. The S&P 500, technically it met them last month, but it's nicer to see it break significant swing tops as well. So we're looking here for three key signals. We have the logarithmic downtrend line. The S&P 500 has broken that. It broke it in January of 2023, nice close above. It then came back and retested that line in March during the banking crisis, and the market is now pushed away very strongly from that low, currently up about 13% since that low at a top of nearly 14%. So it's broken the logarithmic downtrend, it's come back and tested it. That's a great thing as well. It's closing above it now. The next thing, it's closed above the 50% level, 4,157 points. It closed above it in April, but we hadn't met the other criteria yet, breaking monthly swing tops. In May, it broke the monthly swing top, but closed underneath it, but it closed above the 50%. So it was in that transitional, uncertain period, whether we're going to go up, down, sideways, what's going to happen here. The market was still trying to decide. And as you remember, for that 2-month period, things were pretty boring. It wasn't really going anywhere. A couple of a percent to the downside or 0.5%. Bears were getting excited, 0.5%, 1% to the upside. I was getting excited. Bull markets, starting to push higher again. But this time in June, we've seen a clean break of the monthly tops and the monthly swing tops. Two different things there. You've got monthly tops, so the top prices, but then also the swing top. And that's what this yellow line is here. It is the TIA Gann swing indicator. That, of course, is in the video description down here as well. This helps you very, very quickly identify key resistance and support levels in the market and shows you where safe levels to put stops are in the market. Not just anywhere willy-nilly or percentages away. These are key areas in the market that hold the market up, and there are key pivot points for the short side and the long side. Back to the three signals. So condition 2 was met. We had closes above the 50% level. Now condition 3 was a break of the monthly swing tops. Here is a monthly swing top. Last month, we had another monthly swing top put in, and the big one here is the August swing top. That's the one I want to see the market break. So far, we have broken it. What we need in the next 3 weeks is a nice close above that level. But since we've broken it, it's basically been met. The bull market signals are there. This is very, very difficult to comprehend if you're on the bearish side of the market, because, of course, the bearish side is expecting a collapse, is expecting lower prices in March and October. And they're saying, just wait, just wait, just wait, just wait till the second half of the year. That was the same thing that was said for this half of 2023. It was the same thing that was said for the second half of 2022. But I'm going to show you some massive data that's coming up in the next 3 weeks that shows that the bull market is back on. Of course, there is a slight bias here because I'm bullish to the upside because I have to take a position. I'm a trader and the data is saying it is going up. I mean, even the bears can't deny that it's going up. It's up 24% from the low. So just wait for a major collapse. Maybe it comes, but so far it's not happening. And it looks like we're getting a push and a bigger squeeze to the upside. There will be corrections. There has to be corrections, and the bears are going to get excited for that. We know that, okay? But eventually this is going to hit some sort of resistance and correct. Overall, in the long term, there will be a major collapse. And at that time, I'll flip macro bearish. But for now, as I've pointed out, those three significant major indicators are telling us that the bull market is back on and the bear market is basically dead. It is dead in its tracks. Logarithmic downtrend has been broken. We've had a test, which is also great. The 50% level, so that's the major 50%, it has been broken and closed above, potentially going into our third month now, closing above. And one of the most important ones is breaking monthly swing tops. That has been broken, and we're waiting for a close above those levels. So all of the technical indicators, the data from the chart, not my opinion, putting my bias aside, are telling us that the bulls are well in control. This was the early stage down here in October. There was also a good opportunity in June, just before the slightly lower low, and another fantastic opportunity that happened in March, like we covered here on the channel. That's why I always suggest liking and subscribing to the channel so that you stay up to date with the macro content here. Now, looking at the NASDAQ, we've also seen a very strong close to the week. One of the highest closes we have seen since March of 2022. We are up nearly 42% from the low. This is almost starting to sound like an altcoin. There is so many gains to be had to the upside here in the tech sector. Of course, there are fears that the tech is going to get a massive correction, or in the case, maybe a massive collapse that takes out new lows. But we've also met the criteria, those three criteria for the bull market to begin. The lows are in, of course, for October. We've broken the log downtrend. We have broken the 50% level. We have broken the monthly swing tops. We throw it onto a monthly chart here. So you can see that it's happening the same. There is more push to the upside. Sure, there are a few stocks that are pushing this up. And yes, things are getting overheated. But because we had such strong shorting at the bottom, which of course is the wrong time, potentially this move has further to go. I'm not saying that we won't get a correction. We will definitely get a correction. That always happens. But because there was so much shorting, so many institutions, so many speculators saying the market's going to go down, yet it went up, they eventually have to cover their position and start to buy back to cover their position, which then causes the market to go higher than it should be. So eventually we'll get a bit of a level of resistance and a correction. Nonetheless, we continue to track the significant lows in the market. And so far, the NASDAQ has also met all of that criteria. It is up now 42%. The VIX also pushing to newer lows. Yes, eventually the VIX rolls over and we get a low in the S&P. So this is what these spikes are. These are all significant lows in the S&P. But as you can see, if this market is trending down like this, lower lows, lower highs, this is a bull market. That's exactly what we have seen over this entire period. There is your cycle low in October. Here are your lower lows. And now we've even squeezed even further. So we're going to get a correction in the S&P, meaning a pullback in prices, a move down. But overall, this is what happens for long periods of time on the VIX. Very long periods of downtrends, which are bull markets in the S&P, in the NASDAQ, etc. Now we're 3 weeks away from this massive signal. The markets are flipping. They've been flipping for many months. For some bears are actually starting to flip bullish. They're seeing the signs. Let me know in the comment section if that is you. Are you starting to see how this market has formed a bottom and now it's starting to push into a bull market? And I totally understand there are going to be plenty of bears saying it's going to collapse. Okay, let me know in the comment section down below. But are you a bear that has flipped bullish and you're starting to see how bottoms in the markets are formed? They have to form on bad news. Tops will form on good news. So when there is a ton of good news, which there is not right now, but when there is, that is most likely going to be the top, probably a couple of years away at this stage. And I will flip bearish at that time. But for you guys, let me know in the comment section, are you one of those people in the last few months, which is absolutely okay, to understand and see how the lows have formed and you're flipped from bearish to bullish and you're starting to see the patterns form? Okay, let me know that. Top of the video description as well is our free crypto trading workshops. These are the results that our members are getting. You guys that are hitting the mark with your shorts on crypto, your longs on crypto. These are shorter term timeframes, so Great profits there from you guys there. 40%, hitting the mark there, 55%. Nice new one here this morning, 33% from Mr. Nice. So congratulations to you guys smashing that. If you want to get involved trading crypto, because there is a lot of downside to go with altcoins, not necessarily Bitcoin, but altcoins. These are the links in the top of the video description. Click that, subscribe to the newsletter. You'll get notified when that is being released. The 6 monthly signal here. Now, this was brought up when I was chatting with Eric Crown. So a good friend of mine also has a YouTube channel. Go and check his stuff out. Also on Twitter. Looking at the 6 monthly chart. And we've got 3 weeks to go in that. We're getting another high close on the 6 monthly chart. 6 months, okay? A massive, massive signal here. And so that led me to take a look back in history over 120 years. And I thought, if we have a green 6 months, how many times in history has a green 6 months failed from a low? Has it failed to make a new top? And I went back to 120 years here looking at the data. So I'm going to go through this quickly because I know my videos can get super, super long. And essentially, we can go all the way back here with the data for the Dow Jones, all the way back to the 1890s. Okay, so it's a very, very long time ago. Different era. There wasn't as much money printing. There wasn't even money printing back then. But nonetheless, there is still some great data to see. This is your 1920s, roaring 20s. Okay, there was a collapse here. Red 6 month after red 6 month. There were no green 6 monthly periods in here. Finally got the green 6 months. Markets up. No new low was formed. All right, so I'm picking out the areas here just to save time, but you can go back and do the data, check the data yourself. Here is the push to round about the same highs, but we had a green 6 month, a red, a green, red, red, green, 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 red. The lowest this went in 1910 was 3% from the current low. So I'm picking out the times here that the bears actually won this fight. This was before the First World War. Think about that. That was before the First World War, and it went 3% lower than the previous low. Then green months occurred. Here we go. Roaring 20s, Great Depression, got green months, got green 6 monthly bars or candles. Market is up from that point. No new low formed. Green 6 months here from this first little crash. There was no new high yet, and it's still above those lows. Nonetheless, let's take that data into consideration. It went below that previous low by 5%. So it doesn't technically count because we haven't hit a new all-time high. Nonetheless, I want to take that in because I want to give some bias to the bear side here. There is the possibility of that 5% going lower. Of course, I don't think that's going to happen based on the probabilities, but nonetheless, there it is. So far, you got before World War I, 3% lower than the current low. And here in the 40s, during World War II, 5%. If you want to take those odds and you think World War III is happening right now, by all means, maybe you'll get 3 to 5% lower than the current low for the S&P, for the Dow Jones, etc. Okay, moving forward, here we are in the 60s. We had a 14.7%, call it 15%, but this market was below the previous top. So we had a green 6 months, tried to climb, double top there, below the top there. So it didn't necessarily technically hit above the top. Nonetheless, I want to give it to the bears. So we have an understanding here. There's 15% below that low. Move to the upside. New all-time high. We've got some greens here. We got a new high. Collapse. Reds, reds, reds. Greens occurred. No new lows. Fantastic. Now we have to fast forward all the way through to where we currently are, or into the 2000s. Here was one green 6 month period, and the rest were red. But that happened right at the beginning of the move. And the next 6 month period was red. So a slight green of 3% and then reds. Didn't happen again in the GFC. That's what that is. We had a green 6 month, markets up from that point. Fast forward to today. Now, what have we got here? We got a green 6 month period. We've already seen that. Nice solid up period of 7%. And what we're currently, where we're currently set is 2.2% up. So potentially our second green 6 monthly candle, which will close in about 3 weeks' time. So I've gone through a ton of data there. If you still believe that it is bearish, maybe we're heading into a World War III or currently in one, because that's what happened there, World War II, and this was just before World War I, then maybe we get a slightly lower low from these levels here, just based on the data. Otherwise, almost every single time in history, and I'd almost put that down as 100%, once you get a green 6 month, potentially even 2 in a row, it is likely that we're going to see new all-time high prices and the low is not going to get broken. Does this apply to the NASDAQ? Yes, it applies to the NASDAQ as well. There's your dot-com bust, all reds. Here come the greens, no new low. And then we get the greens again, markets away, new all-time highs. We've got a massive green 6 monthly candle forming here. Throughout history only goes back to the 1980s. There's the collapse in 1987, move up, green, 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 green. Okay, SP 500, let's have a look at that. Same deal here as well. All reds, you get a turning point, green 6 month, new all-time highs, or at least a bull market for several years. And then we get the collapse, green starts again, bull market happens. 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 Green again, bull market happens. I know I'm repeating myself in a very monotoned way, but it's to emphasize the point here that we have these green 6 monthly candles, market makes new all-time high. Green 6 monthly candles, market makes new all-time high. Green 6 monthly candles, market makes new all-time high. Is this time different? If you want to bet against 100 years of data, by all means, go ahead. I don't think we're in a different time to what we were. There is plenty of similarities throughout history. Things will eventually be different in the future, but they're going to rhyme. And right now we've got 2 green 6 monthly candles happening. This is probably one of the best signals you're going to get on a macro scale here for a new all-time high coming very soon or in the next few years. Now, with all of that in mind, if you've appreciated that, let me know. Hit that like and subscribe. Let me know who you are sharing the content with as well, because this is leading us on to BTC. Now, there was a lot of data going on there because we're building up a case here. We're building up a case for BTC. Those markets have to be in bull markets for trading, for speculating to happen in Bitcoin and crypto. It has to happen. There is not going to be huge gains in Bitcoin or crypto unless the traditional markets also have a bull market going on. So we've got the case now that the bull market is here for those for the traditional markets. I understand there are still going to be bears out there. This is just part and parcel of the game. Okay, but if we just look at the data, put the bias aside, put the economics aside, and look at the clean data from the chart that is telling us a bull market is on, then we can start to look at BTC and look at our 6 monthly bars and candles here as well. In the past for BTC, we have a 6 monthly candle here. So there's a red, there's a green. But the main thing I want to look at here is after reds, once we see a green, do we ever break to new lows? Do we ever break to new lows? Well, this was a green here after a red, new all-time highs. 6 reds in a row. Remember, these are 6 months. So it's going to be a 1.5 year period. A green begins, new all-time highs. 2 reds. We have a green. We have another red and then a green, not a new low in this case. Sure, it went close to it, but this was a black swan. And again, some are trying to bet on the fact that there's going to be another black swan. I think betting on a black swan is not a great idea because you can't bet on a black swan. Trying to wait or anticipate a black swan event is a fool's game. All right, so we're just going to put that aside. Nonetheless, it didn't even break it, so it hasn't broken the signal. And then green 6 month bars all the way to a new all-time high. This time we got 2 reds. Looks like we're about to close out a green in the next 3 weeks' time. That basically means bull market on. I know we've talked about bull markets and other signals and other indicators, but this alone is basically saying bull market is on. Sure, we can get another red after this period. Maybe the next 6 months after June is red, but it is likely, not guaranteed, but it's very likely that this is now the start of that bull market. Just another indicator to amplify the reason for the bull market. Now, a couple of disclaimers to this signal as well. Just because a bull market is on, it doesn't mean we're about to go to a new all-time high in 2023 or in 2024. I've never said that, and I don't think that is a great case to be made. It could happen, it might not. The main thing here is that it is not a bear market, and it's very unlikely that we're going to see new lows. It's very unlikely that the market's going to go below $15,000. And probably very unlikely that it's going to go below $20,000 at this stage. But nonetheless, we are just going to look at the low for the cycle, and it's very unlikely, probably almost impossible that it's going to go below that low. That doesn't mean that we don't have long periods of nothing, long periods of the market going sideways between a trading range that is a very good trading range. Now, somewhere between 6,000 and 13 or 12 or 13,000 is what happened in the last cycle. So you got a 100% move there, or 50% to the downside, to be trading in. And that is still great opportunity for the next 6, 12, 18 months before you get that last push up in the bull market, like we saw in 2020, 2021, 1, 2, 3. So that's 18 months. Like we saw in 2017, we had two really strong months, or two really strong periods of the 6-month period. And then prior to that, we had some pretty good months or pretty good bars as well. Going back another cycle, two really strong pushes to the upside. So there's going to be probably 2 to 3 periods, being the 6-month. That could be really strong trending. But before that, there's probably 1, 2, or 3 periods, the 6-month period, that are going to be that sideways trading period. So if you want to learn how to trade in these markets and still make money, of course, check the link in the top of the video description. This is our free crypto trading workshops. As you can see from our members, making very, very solid gains. These are just the updates from today and yesterday. And like I've shown in previous videos, there are plenty more where that came from. Lots and lots of profits being made from you guys alone. Plenty of profits to be had trading cryptocurrencies, especially when the market is going up, down, sideways. We are not concerned with the market breaking to new lows. We've stated why that is the case. But for now, we're just waiting to see what Bitcoin does. Overall, it seems like we are in that bull market. So stay tuned to the channel, hit that like and subscribe. Have a fantastic weekend. I'll see you back here next week from a new location. So I might be back on Tuesday instead of Monday. Thanks once again, guys. I'll see you at the next one. Until then, have more fun to get more done.